Welcome back. We've often heard that if you want a good return on your investment, equity is the way to go. While this may or may not always be true, there is an asset class that is believed by experts to be better than fixed deposits. And this investment option has been a hidden gem among other well-known investment avenues. It is called GSec strips, or separate trading of registered interest and principal securities, a perfect option for low-risk investors. This instrument acts as a zero coupon bond and offers about 100 to 150 bips more than bank deposits. For this, I am joined by Hemant Ustigi of Vice Invest Advisors to discuss more about GSec strips and how can one invest in them and why this option supersedes most other investment instruments. Hemant, welcome to the show. This sounds slightly complicated, but when we talk about GSec strips, widely accepted and invested in the US and the Western markets, but when we talk about India, a lack of awareness is one of the issues where people don't know about this investment instrument. Let's get down to the basics and let's break down this sort of investment. What are strips? What are GSec strips? And how can one invest in it? And when we talk about low risk, does this also mean low returns?
Well, Kavita, you're absolutely right. What we have seen is over the last maybe year or so that there is an increasing interest from the retail investors in the GSec, and this is an option when we talk about GSec strip, which I think has the potential to be in the portfolio of all those investors who are looking at kind of safer investment, but at the same time looking at a return which could be better than a fixed deposit that you get. So these are essentially, I would say, debt instrument which are created through the process of coupon stripping. So in a way, I think it'll be right to say that these are like any other government securities. The difference being that the interest portion is separated from the principal, which means that as an investor, you have the option to buy a strip created out of interest portion or from the principal portion or both. And I think it's equally important to understand that the strips are created out of existing securities. No, they're not like available through auction like other securities. Let's understand this by way of an example. Let's say when rupees 100 of a government securities, which is offering you 8.6 and maturing in 2028, is stripped. Okay, every cash flow of 4.3, because the interest is paid on a half-yearly basis, every cash flow will be a coupon strip. And the principal which will be paid back, let's say 2028, which is 100 rupees, that's the principal strip. So this is how, from a security, you will have a multiple coupon strip, and then you have a principal strip. A couple of important things, I think, again, it's important for every investor to understand that all these government securities which are transferable and are eligible to be a part of SLR are eligible for stripping or reconstitution. So I think this is very, very important. And as you rightly mentioned, once it happens, it takes the form of a zero coupon bond. So clearly, this is a great option, a simple option. It's just that as an investor, we need to kind of really understand this. And this can definitely find a place in every investor's portfolio who's looking at a conservative option, at the same time looking at a better return than what they get elsewhere.
Okay, so how do we go about it? What kind of investors first should be investing in it? Do we need a demat account for this? Are there any minimum to maximum range of investment that we should be going on when we talk about strips?
So I think here again, it works in the favor of, I would say, even retail investors, because you can invest as low as 1,000. And of course, you would need, because it's created out of existing government securities, you would need a demat account, the same demat account that you usually use for buying stocks. And of course, you need to have a demat account, a trading account with the broker if you want to start including this instrument in your portfolio.
So, we need to have a demat account to buy these GSec strips. But from where can we buy them? And when we talk about interest on our principal, does this keeps changing? Is it something like a bond that keeps getting issued and the interest and the coupon rate keeps changing? How does that work?
Well, I think these securities are listed. So clearly, as you buy, like I said, you use the same demat account as you use for buying stocks. And in a similar way, you can buy this strips through your demat account and a trading account that you have with the broker. I think you asked me a very important question in terms of the interest. Like when we talk about this security taking the form of zero coupon bond, which means that there is no interest component, which is, I think, very, very important for every investor to understand. So what happens is that you buy a security at a discount, and at the time of maturity, be it uh, you know principal strip or even the coupon strip, you get a face value at the time of maturity. So the gains that you get come to you as a capital gain. So obviously, if it's a longer term gain, which is more than 3 years, is get taxed at, you get an indexation benefit. And if it is a short term capital gain, it gets taxed at your applicable tax rate. So this is different because interest that you earn otherwise gets added to your income. This comes as a capital gain for you. I think so. Even in terms of taxation, this can be a better option.
And how are they taxed?
As I said, this is treated as a capital gain. There is no interest component.
Perfect. But then, how volatile would the price be, and what would be the potential risk of investing in this kind of an instrument?
Well, of course, there are two sides of every investment that you make. As we know, the government securities, if you hold till maturity, they're absolutely, I think, in terms of they provide you the highest safety. But during the interim till the maturity, there can be price volatility based on the maturity and how the interest rates are moving. So clearly one has to be aware of this fact that there can be a price volatility. But then if you're very clear in terms of your time horizon, and if you buy securities accordingly, then I think you can tackle it to a large extent.
What about senior citizens investing in this kind of an instrument, because the risk appetite is comparatively less, and also it's government security that we are talking about, where the trust factor is definitely more as compared to other financial instruments. Would you advise a senior citizen to go for this?
Well, I personally feel that any conservative investor who's looking at option and is very clear in terms of the time horizon that investor may have, including the senior citizen, I think they can buy it. We talked about various steps being created from the coupon as well as the principal, which means that periodic maturity is there, and then obviously there is a long-term maturity. So even if you are someone who is about to retire in the next few years, or if you're a retired person and you're very clear in terms of how your requirements are going to be, so you can definitely invest in these instruments and then match the maturity of that with your requirement. So clearly, as I mentioned earlier, in terms of safety, they are called the highest safety as far as all the investment options are concerned. So definitely, even the senior citizen, provided they already have a demat account or well versed with how to buy securities from the stock market, can definitely go for this.
What are the common timelines of maturity period for strips, and how can one actually mix it with their financial portfolio and for their financial goals?
Well, I think there are a number of maturities which are available to you. Now, let's take a couple of examples in terms of what kind of yield can you get and how these can be included in the portfolio. Let's talk about a security which is, let's say, maturing on 16th September in 2024. So if it's available at 86.60, your yield is going to be around 6.6. So if you need money in 2024, you can definitely go for this. Then let's talk about a security which is going to mature on the same day, let's say in 3030. And if it is available at 55.83 around or thereabout, the yield is going to be around 7.5. Again, if your requirement is going to be in that year, you can look at that. I think it's important to match the maturity of the security with your requirement so that you can avoid the volatility that you may have to face in the interim period.
When comparing with fixed deposit, what are the parameters that you would find strips better than a fixed deposit?
Well, I think there are a couple of reasons why I feel that this can be a better option. Like one reason, obviously, as I mentioned, I think they provide you the highest safety. Even in terms of return, I just gave you an example. Of course, this can change the gap between what a fixed deposit will offer and what these strips will offer can narrow if the interest rate keep rising from here. But definitely, there is a potential to get higher return than what you get from fixed deposit. I think the most important benefit apart from these two is that there is no reinvestment risk. So when you put money in let's say fixed deposit, and you're not very clear in terms of your time horizon, or you let's say invested for a year or two, at that point in time when you want to reinvest your money, it's quite likely that you may actually have to kind of opt for a lower interest rate. So in that case, because here these are slightly longer duration and you lock your money, there is no reinvestment risk, which I think is a great advantage for anyone who's trying to compare this option with fixed deposit.
One thing, Hemant, which I want to understand, we are in a rising interest scenario where even fixed deposit right now are looking attractive because the rates are going up. Even then, you think strips are a better option, or they are at par with the rising interest rate scenario?
Well, as I mentioned earlier, that since we are in a scenario where the interest rates are going to rise further, the gap between what these tips are offering and what FD will offer, maybe it will narrow down. But I still feel that they may still be at an advantage in terms of what they can offer vis-a-vis the fixed deposit.
Rising inflation, that is one risk, and which is why we always advise our viewers to have a diversified portfolio where they obviously can beat inflation. What about strips and fixed deposit? Obviously, I think it's a similar kind of product that we're talking about. Beating inflation and getting a return beating inflation, is that a problem with strips and fixed deposit?
No, I think again, look, there are a couple of factors that you need to look at. You have various products in your portfolio. Okay, now you're not looking at beating inflation from every part of your portfolio. What is important for you is that overall your portfolio return should keep you ahead of inflation. For the portion that you want to be very conservative and you don't want to take a risk, as we discuss in detail, I think these can be good options. Of course, there are other options also which can be looked at. But I think in terms of staying ahead of inflation, you need to look at overall what is your portfolio mix. It's not that you're investing 100% in this. There are options of maybe looking at some of the mutual fund option like hybrid option, even if you don't want to go 100% into equity. So I think the key is to have the right kind of combination, which overall can help you beat inflation.
Right. So, if you're a conservative investor and you are looking for some steady amount of investment return, GSec strips is a new option for you where you can line it up with your financial goals and place it in your financial portfolio. With this, we will slip into a short break, and right up we have callers who want to ask their questions, their financial planning questions that will be answered by Hemant Tustiki and Amit Kukreja.